Ladies and gentlemen, boys and girls, welcome to another episode of Property Pro Tips, straight from the pros. I'm your host, Trevor Henson, and today we have the infamous and famous Jonathan Twombly. Welcome, Jonathan.
Hey, thanks for having me very much. I'm very happy to be here.
Jonathan's a podcast celebrity. If you search around through Spotify or YouTube, you'll find his name in numerous dozens and dozens of podcasts. So it is a absolute pleasure and blessing to have him on my show. So thank you, Jonathan, for your time, sir.
Yeah, happy to be here. Thanks for inviting me. Yeah.
Much appreciated. Jonathan's background, quick background on Jonathan. He's been in since 2011. Jonathan has helped high income earners invest passively in multifamily real estate and boutique hotels through syndication. He also mentors aspiring investors. So you hear that, folks? He's going to give a little plug at the end of this. Those of us who are looking for mentors, like I was when I was in my 20s, early 30s, you just found it. He has over $250 million in real estate deals completed. Jonathan brings a wealth of knowledge and experience to the table. Before real estate, he was a corporate lawyer known for his attention to detail and creative problem solving. So welcome, Jonathan. Sounds like you've had about 3 lifetimes already to my one. Please give us the 30 seconds about. I know you're the founder of 2 companies. One is the Apartment Investors Club, and the second one is the Two Bridges Asset Management. Do you want to tell us a little bit about each one of those and how we can get in contact?
Yeah, sure. So Two Bridges Asset Management is my investment platform. The best way to get in touch is actually to Google it. The URL is not that easy to say. So just Google Two Bridges Asset Management. It'll pop right up. If you want to get on our investor list, there's a form you can fill out, and we'll be in touch to schedule a call if you want. As for the mentoring side of the business, that's Apartment Investors Club. You can go to apartmentinvestorsclub.com to sign up. There's a free download there called the Ultimate Checklist to doing your first 100-unit plus deal with other people's money and getting paid to do it. If you hit the download button there, and then, or you can just go to the school.com. That's school with an SK, school.com, and just search for Apartment Investors Club, and it'll take you to the landing page, and you can just sign up right there.
Excellent. Thank you, Jonathan. Well, so diving right in to kind of a first question on this, and your career has been such a interesting, it's almost like from almost 180 degrees, not quite, but I mean, you started off as a corporate lawyer and moved into a real estate investor. What motivated you first? What motivated you to make the change from being a successful corporate lawyer to the wild west of real estate investing?
Thought I wanted to be a lawyer, went to Columbia for law school, got into a good law school, went to work for like a white shoe law firm in New York City, was doing pretty high level intensive litigation on like these huge, we used to call them bet the company matters, some $100 billion liability cases, always on the defense side. The first few years were really fun, but after about the 3rd year, it really it kind of caught up with me, a lot of the grunt work that I'd somehow luckily avoided the first few years of practicing. And I just sort of slowly started just getting ground down by it. It wasn't as interesting as I had first thought. Terrible. I was just working, 12, 14 hours a day, 6 or 7 days a week, eating at my desk 3 meals a day, gaining a lot of weight, not meeting women because I was just working all the time. It was just like, basically my life was like, wake up, work, eat, sleep, wake up, work, eat, sleep. Like there was just kind of nothing, else going on in my life. And after a while, it just really got to me. And I kind of burned out and just like walked off the job one day with no plan. And because I didn't have a plan, I wound up going back after a few months. But at that point, I sort of started thinking, well, what do I really want to do with my life? And I started thinking a lot about real estate. I was thinking, I knew I wanted to do something entrepreneurial. Like one of the things that I really was that was kind of bugging me about being a lawyer was that you never really got to choose what you worked on, and you never got to like create something new. It was always these 2 parties are fighting with each other, and you've got to be the hired, attack dog for one of them. And it just wasn't fun, right? And I wanted to be in a situation where I could just create something from scratch. And I wasn't really sure what that was, but I was always kind of interested in real estate. And in the latter part of my legal career, I actually wound up doing mostly real estate litigation. So it's kind of like surrounded by real estate deals when they fell apart. And I started kind of like seeing how they worked because I'd have to read through all the documents and understand how the partnerships worked and all that sort of stuff. And also like looking at these, here I was sort of miserably grinding away, and I was looking at these guys who were like buying hotels and like worth, $500 million. And like, I remember oh no, we didn't represent it, but we were in this litigation with involving this guy who started out like, he was manufacturing, like he started out working in a textile shop in Chinatown, and he worked his way up to like owning a textile shop, and he started investing in real estate. And then by the time I encountered him, he was worth $500 million, and he owned like 10 hotels in New York City. Right. And I was like, I got to get that somehow. And when the
Wow.
great financial crisis came around, I was, went from being really busy to like not having any work to do at all. And I was sitting around, like literally kind of twiddling my thumbs in my office, kind of like figuring out what am I going to do with myself. And I started digging into, I was like, well, how could I start investing in real estate? Like, how could I replace my income with real estate? And I started looking into like brownstones in Brooklyn. And I was like, well, okay, I can't really get together a down payment for something like that. What else is there? And I started looking into basically brownstone buildings in kind of like upstate New York. And then I was like, well, if I make like, if I make $100 a month on one of these properties, like how many of those do I have to get to replace a, $300,000 a year income? And I was like hundreds of them. Okay, well, that's not going to happen either, right? And then kind of like fate took a turn, and my company decided that after 2 years of paying me $300,000 to sit around looking at brownstones in upstate New York, they decided they didn't want to do that anymore. So they let me go. And I was then suddenly in a situation that I used to describe as, okay, do I really want to, am I going to be able to interview for jobs that I don't really want? Like I was done being a lawyer, and I was like, well, how am I going to go get into the law job if I don't even want to be a lawyer anymore? Right around that time, I met somebody who I was doing a lot of networking, and I was trying to network with people who were in real estate. And in some networking meeting I was at, it was not a real estate thing. A woman, we went around the table and everybody introduced themselves, and she said, I'm a commercial real estate investor. And I was like, oh, okay, I got to talk with her. So I arranged to have coffee with her. And the upshot of the conversation was, well, she said, well, look, I'm starting this real estate investment company. Would you like to be my partner? And I was like, I don't know. I just met you, like, I don't know if I want to be your partner. I don't even know what you're really doing. So she kind of like walked me through what she was doing. She was like buying these, or proposed to buy these, 100-unit properties in like Louisiana and Texas. And I was like, how on earth are you going to buy a 100-unit property? Well, turns out that in those days, a 100-unit property in Louisiana cost like what a brownstone in Brooklyn costs, right? So you could buy, 100 units for $3 million, like a C property. And so I was like, well, that's kind of interesting, but we're still, where are we going to get the $3 million? And she's like, well, I think you can raise money. And I was like, really? So I I said to her, okay, well, I'm not sure. Thanks very much for this invitation to become your partner. I'm not really sure if I want to do this, but I want you to talk to some of my friends, because I kind of decided to use some of my friends as my due diligence on her to see if like she was full of it or not. So I trotted her around to several friends, and the upshot of that was, well, they said, we like her. We think sounds like she knows what she's doing. It sounds very interesting. If you decide to partner up with her, we'll give you money to invest. And it wasn't like, yeah, I'll give you $50,000. I mean, it was like real money. It was like, I'll give you $1 million if you invest. So I had two
Wow.
people say that to me, right? So I basically was like, okay, I've got $2 million, like sort of pledged to me. She's asking if I'll be her partner. because she thinks I can raise money. Like maybe I should say yes to this opportunity. So, because I'd already lost my job anyway, right? And I said, okay, sure, let's do it. And so we spent a couple of years, and that was sort of how I broke in. And we spent a couple of years kind of chasing deals in Louisiana. We had a couple of deals under contract, but it was a terrible lending environment. This was like 2011, 2012, and we had lenders back out on us. Like literally, like at the last minute, we had a lender come all the way to the property inspection stage with us and then back out for the most ridiculous of reasons. They were citing stuff like the breezeways are dirty, and we found a golf ball that came through a window from the golf course next door. Like literally, this is what they said was the reason for backing out. I think they just got skittish about, like investing in Louisiana. It was like right after the GFC. So there we were. We were fortunately we were able to get our deposits back, but we had a lot of expense that we had, due diligence expenses and legal fees and things that we incurred. And so we were kind of like 18 months into this with like no deals done and out of pocket a whole bunch. And then decided we sort of would go our separate ways. At that point, I sat down with one of my investors and I was like, hey, I don't know what I want to do. I might have to go back to practicing law. And he was like, no, slow down there. Why don't we become partners? I'll give you some seed money so you can live and you get to work. So started Two Bridges at that point, shifted my focus to the Carolinas. And at that point, it got a lot easier. It still took me about a year to close the first deal after that. But then once I got that first deal, then started getting, more in rapid succession and built a portfolio there. And that's kind of how I, got into the business. So a little long-winded, but that's the story.
That is a fascinating story. And I just want to highlight one point here for those out there who think everyone gets rich quick on real estate. You're talking almost 3 years from making $300K to zero, and then 3 years of nothing, of trying, hustling, grinding, and the first effort didn't end up 18 months, ended up with nothing, and then you went on to the next thing. And that's the tenacity I believe is required to be in this business, because that is like, all right, most people would have stopped somewhere around 6 months in and be like, okay, and you went all the way to the bitter end and then kept going. And what made you keep going? What is it, after that first kind of? I know you're angel investor, like Providence, so it seemed like it intervened at that point, but there had to be some doubt in there. And how'd you get past it?
Oh yeah, well, I mean, I definitely had doubts at that point. When my friend kind of swooped in and said, hey, and I was very lucky because he worked in Wall Street. His career was doing really well on Wall Street, and he was starting to make angel investments in different things. So I think he liked the idea of making angel investments with people that he knew, as opposed to, so like he backed my company, he backed a friend who was opening a restaurant, like things like that. He did stuff like that. So it was just good timing, right? If that hadn't happened, I don't know where I'd be now, but yeah, in terms of just continuing to go forward, I mean, I guess I just really wanted it, and I really didn't want to go back to law. And, so I guess the only way to go was just to keep going forward, which I did, so but I have to say, right now we're in an environment that looks a lot more like it did when I started out. Right. And a lot of people came into the business or became interested in the business after, say, 2016 or 2018, when the market was really on fire and interest rates were low, the market was very liquid, there was a lot of LP capital out there, and a lot of people think that that's normal. It was a lot easier to get started in that environment than it was in 2011. And I have to say, without discouraging people too much, what we're going through right now is a lot more normal than what we went through, especially sort of 2021, 22, 23. right? So um, it's real estate's not easy, right? It's not an easy thing to do, especially if you're starting out and you're trying to like syndicate deals and stuff. There's a lot to learn and a lot of moving parts and a lot of bad information out there about like, hey, you should start with a big deal. When I started out, we were doing 100 unit deals, but like I said, a 100 unit deal cost you $3 million. Now a 100 unit deal is going to cost you what? Minimum 10 million, more likely 20 million, right?
Depending
It's
on
a
where
whole
it is,
different
right?
animal. Yeah. And it's a lot harder to like come up with that money, right? So I always advise people to kind of like start where you can. Don't look at the gurus who are telling you what you should do. What you should do is whatever you can do, but start where you are and work from there, So
I like that. You should do whatever you can do, and
yeah.
nothing more, nothing less, right? That you're able to do. Nothing wrong with reaching for the stars, but you don't want to shoot for the stars and hit the moon. It sounds like what you're saying. So you want to shoot for the moon and hit the moon.
Yeah, I mean, also you don't listen, it's real estate, especially like, if you were pointing out people in their 20s and 30s, may not seem like it now, but you have a lot of time, right? And there's a lot of time to do this right and to like slowly build a really solid real estate portfolio that by the time you're my age, like you'll be retired. I didn't even start till I was 40. But if you just keep on grinding it out little by little over the next 10 years, like, you'll be just fine. So there's no reason to kind of be in a rush. And I also don't advise you to quit your job. I don't advise you unless
Burning
you
the
have a rich
boats? No,
uncle,
no, not burning the boats.
unless you got a rich uncle, or a trust fund. It's not advisable.
How was dovetailing in from your lawyer experience into the syndications? How was your experience as a corporate lawyer? How did it work when it came to negotiation? Did it give you an edge when structuring the deals or when negotiating with people? I imagine being a litigator must have had some kind of, or maybe even a lot of dominance on the negotiation table. To speak a little bit about that.
So, no, I mean, ironically, not really, right? I didn't, because, big firm litigation, you're really just doing a lot of writing. You're not really in
Really?
court. You're not really doing a lot of, especially as like an associate, you're not doing really negotiation. It's really just a lot of fighting through brief writing and stuff. So,
Hmm.
um, so actually, where my legal career really helped in syndication was in some surprising ways. Like I was able to, because of like my experience with writing and also working on some firm marketing stuff, like really put together good marketing documents for deals, like put
Right.
together very persuasive, like very complete offering memoranda that like really answered
Right.
all the questions that people would have, because that's the thing that you're trained to do as a lawyer is like anticipate every question or every objection that could possibly come up and figure out how to address it. So
Oh, interesting.
that's kind of how like I would design my offering memoranda to basically think of like every question an investor might have and you know and address it ahead of time, or it helped me actually with the marketing. And it's just also, I think there's like, if you work in like a Wall Street law firm, you learn a kind of level of professionalism that you don't learn in a lot of other places. So I think I was able to come across a lot more polished than like my experience in the real estate business would have otherwise, allowed me to do. So I think those things really helped a lot. So it wasn't so much like that because I didn't do my own legal documents, I didn't negotiate, like wasn't at the, pounding my hand on the table or anything like that it was, really with those other things, just kind of like the way that I was able to kind of present myself, and present deals. And that's where that background came in really handy.
That's such an interesting take on it. I would have never guessed that answer, but it's such a succinct way to explain it. It was the character built kind of in the forge of the corporate and like super corporate. You said white shoe. I mean, we're
Sure.
talking.
Yeah.
old school uh, attorneys, I'm sure for like Fortune 500 companies, and the that definitely has a polish to it. Were you in suits all day, every day? I imagine in those situations and
Yeah, I mean, up until the
partner
dot-com bubble, when they let us like start wearing business casual on Fridays, in the
on
summer,
Fridays, right?
and Fridays in the summertime. And then eventually, but by the time the dot-com boom like collapsed, they had completely capitulated and it was business casual all the time. But I remember it actually started out being summer Fridays is when you could wear just a shirt to the office.
I remember those days. That's but to your point, I see syndicators in stained t-shirts and shorts and sandals, and they're successful. I mean, we're in California here, so it's a little, this West Coast casual, West Coast
Yeah.
business casual. It's kind of in that same vein, but I've always thought, in my mind, the same way you were couching it was that there should be some professionalism when you're asking for millions and governing millions. It's how it's what my investors expect to see from me, even if it's just a shirt and shoes. But I agree,
I mean,
completely agree.
it probably depends on who your investors are, though, right? Because if your investors are tech guys who are wearing sandals and t-shirts and stuff,
Okay.
then you probably want to wear whatever they're wearing, But if you're going to talk to, a banker, then you want to look like a banker, right? So, yeah, I think you need to be conscious of your environment, right? So, it's one thing that I always coach students. I have this little like sort of mini course that I give away. And one of the things I talk about is that you have to look the part. It's about how to get brokers to show you deals even when you're first starting out. And I talk a lot about like your sort of like your image and what kind of image you need to project to brokers to basically put yourself in a position where they're never going to ask you for proof of funds or whatever because they just assume that you're a pro. And part of that is looking the part. And so you got to show up at a meeting looking like you're in the business, right? And so you got to figure out what the business is wearing. So if you're here in New York, I'm going to go to a networking event right after this, and like everybody there is going to be in a jacket with a shirt and no tie. Like that's just the uniform, right? So
East Coast uniform
yeah,
for sure.
that's what I'll wear, right? So if you're down south, everybody will be in khakis and a golf shirt, right? So it's like maybe in California they're in ripped jeans and a stained t-shirt and sandals.
No, we're in yellow. We're in yellow and like blacks, some funky socks, Jonathan, you've been recognized. You've been recognized in several places for your attention to detail and creative thinking. How do these qualities play a role in your real estate investment decisions?
So I would say a lot more now that I switched into boutique hotels
Really?
than with multifamily, which is a little more commoditized. That it's sort of like the spot the opportunity thing, and that was I guess another thing that kind of like I was trained as a lawyer. It's like pattern recognition. You're looking for like what is the fact that doesn't fit here. What's the thing, and so because that's cases will turn on that
Forensics.
that stuff
Right.
that stuff, right? And so or just if like an element of a cause of action, right, you're suing somebody for something, it'll have four elements, and so you're kind of like looking through the facts to make sure that all four elements are met. And if they're not, like that's where you can go in and say, hey, judge, you have to dismiss this case because this element is missing, right? And so with the hotels, now that I've gotten into the hotels, it's like you kind of like view this hotel and you're like looking at the location and you're like, this location does not match this asset, right? Like this asset needs, if this asset matched the location, this asset would make a ton of money. And it's almost like the numbers are the numbers. And I kind of feel like with the hotels, not that the numbers are not as important, but we're doing like deep value add. So we're really thinking about like what this property ought to be as opposed to what it is. So the numbers where they are right now are a lot less important than with like a multifamily where we were, trying to buy at a cap rate on the, current cash flow, current rent roll. On the hotel, it's really like, okay, what are the room rates we ought to be getting for this asset given where it is, and if it were fully renovated, so it's and you kind of like you can see it. That's the thing. Is I feel like I can like it just like just kind of get an intuitive like, yeah, there's something here when I see this asset, right? So I know based on where this is, how this ought to be performing. So that's kind of that comes to bear too.
And there's a large creative element to that because it's right down to where, like, I mean, location's always paramount, and how you buy it is number two in my kind of in what my experience. Three is what you do with it. What's it look like, right? Like, what's
Mhm.
the feeling when you first show up at the building? That's true again from my experience for multifamily or hotels, boutique hotels, large hotels, any kind of real estate. If it has a feeling when you arrive,
Right.
and your guests or residents are going to also have a similar feeling. And how do you make that feeling enhance that feeling, right?
Right. Yeah, and I think when you're in the business long enough, you start to get a little bit of like a intuition about
Mm-hmm.
like the delta between how it feels now and how it should feel. Like if it were properly taken care of, or given the surroundings or whatever, how should this place
Right.
feel? And so um, when you start feeling sensing that gap, it's kind of like intuition that it takes some time to develop. Eventually, if you do it long enough, you will you'll get it. Yeah.
And tell me, Jonathan, when did the switch occur from multifamily and investing to the boutique investing? 'Cause I assume you're still raising money in a similar fashion.
Yeah, so I started so the hotel thing was really kind of fortuitous. Like it was not something that I ever planned to do. I didn't think I'd ever be a hotel guy. I always liked hotels. I always thought they were kind of cool. But like a lot of people in multifamily, I always perceived them as very risky. And I couldn't get my head around it. I wasn't really sure like how like it seems like a lot of moving parts. And so during COVID, I don't know what if it was the same way in California, but like during COVID, it seems like here in Brooklyn, basically like everybody that I know who didn't have like a house in the country bought a house in the country, right? And it was like people would joke about it. It was like oh, do you bought your COVID house too, right? And it was so I'd been after we always go to this area in upstate New York called the Finger Lakes, which is like basically kind of like the Sonoma Valley of New York, right? And it's wine country. There's beautiful lakes,
Mhm.
waterfalls. It's really terrific. And we've been going there for years, every summer. And I was always trying to get my wife to buy a house, to agree to buy a house up there. And she's like, I don't want a second house, too much work, it's a hassle. No way. But during that first year of COVID, when like after 6 months of being stuck in our apartment in New York, we went up to the Finger Lakes for the summer. Pretty much as soon as we got there, my wife was like, let's buy a house. So we
That's awesome.
spent we basically spent we spent our summer vacation like looking for houses along with everybody else, by the way. Like it was not easy to find a house. It was very hard. But anyway, so we finally bought this house. And once we had the house, started going up to the house a lot. And in order to get to the house, we would have to pass through this town called Watkins Glen, which is famous for a number of things, but it has a racetrack there. But it's also famous for this state park, which has like 19 waterfalls in the state park in this gorge you hike
Wow.
through. And it gets 1 million visitors a year. And it's always ranked in the top 3 state parks in the country. It's really gorgeous. I mean, if you saw like Lord of the Rings, it looks like Rivendell, where the
Yeah.
elves live.
Yes.
It's like spectacular. So you
That
drive through
valley,
Watkins
right?
Glen. Yeah, it's just, exactly. And so you drive through Watkins Glen and you come out the north side and you start going up this hill. And at the top of the hill, you have this spectacular view of Seneca Lake, which is a 37-mile long lake. I mean, it's
Wow.
hills on either side. It's just gorgeous, right? Right at that spot, right where you hit that gorgeous view, there was this crappy ass old hotel, right? Just this like eyesore. And every time we would drive by it, we would have the same conversation, which was, man, somebody ought to do something about that place. Like, what a shame that the
Was it
junky
operating or
old,
boarded up?
yeah, it was in business. And
Wow.
but it was just like, it was like run down and like
Yeah.
signs all faded and it was all, and so and we would literally have the same conversation every time. And so one day I was poking around on Crexy because I was trying to figure out if there were maybe some like multifamily assets up there for sale that I could buy or something. And that hotel popped up, and it had been on the market for like a year, and they cut the price and cut the price and cut the price. And I thought, you know what? This is really interesting because I know this location is a winner, and it's just that asset is so run down. So
Right.
maybe I ought to take a run at this. And of course, like not knowing, since I didn't know anything about hotels, I decided I should find somebody who knows something about hotels. So through a business partner on actually some cannabis deals that I had done, I was like, hey, do you know anybody who has like a hotel management company? And he's like, yeah, as a matter of fact, my wife's cousin has his own hotel management company. So he
Yeah.
introduced us. I showed him the deal. He thought it was really interesting. He had actually just kind of over the last several years had been in the business of precisely this, like renovating these old kind of rundown hotels into boutique hotels. So he's basically had the exact right experience I was that I was looking for. And he liked the deal. And I said, okay. So I wanted to do it like really low risk. I didn't want to take on debt for it. I went to one of my investors, one of my original investors from back in the day, who I made a bunch of money for in multifamily, and said, like, hey, would you like to do this deal? And he said, yeah, okay, we'll do it. So we did the whole thing for cash with a renovation budget as well. And we bought it in 2022, renovated it over the course of the next year, relaunched it in 2023, and now it's doing really well. And it's a 40. It was 40 rooms. We combined some rooms into suites, so now it's 37, and it has a restaurant and a bar, and it overlooks the lake. Every single room has a view of the lake. The restaurant has a view of the lake. It's
Wow.
just gorgeous. So it's like really, it's really popping now, and now it's like the buzz is there, and so it's really performing. But one of the things that we realized, or I realized when I did that hotel, was like, wow, there are a lot of these same kind of owners, like these mom and pop owners in their 70s or even 80s. Like the people who own that hotel were in their 80s. The the husband had actually died while the hotel was on the market, and
Wow.
I think they had listed it when he got sick, and then and it was just, and I realized like there are all so many hotels around the country that fit into the same pattern where they've been owned by the same family for decades. Perhaps that was the family that actually built the hotel in the first place. The kids have moved away. They don't want the hotel. These hotels have not been renovated for years, right? Very often, it seems to be this pattern where they were renovated in the 1990s. They all have the same decor. It's all the flower print stuff, the flower print carpets, the flower print bedspreads, like flower print
Carpet. Yeah. Yeah. Like
everything,
brownish
curtains.
carpet. Yeah.
Yeah, it all looks like straight out of like Laura Ashley or Martha Stewart from
Right.
like the 90s.
IKEA
And
wasn't even around quite yet.
yeah, it wasn't even like a thing then. So they and it's and you can just see this pattern kind of repeating itself. And these mom and pop operators, they don't use any tech. Very often to make a reservation, you have to call the hotel or email the hotel, or email is like the tech that they have, right? And even if they're on Expedia, you can't make an online reservation. You can just find out about the hotel. They don't use any kind of dynamic pricing. And so there's just, because of the condition of these hotels, these owners want to exit. They can't retire without selling because their entire net worth is wrapped up in their hotel. The kids don't want it. And it's hard to sell them because for a couple of reasons, they need a lot of work. And the second thing is the financials are always a tax return that's manipulated to show zero income. So you take it to
Or a
a
loss.
bank,
Right.
yeah, or a loss, and you take it to a bank, and the bank is like, well, this is losing money. I'm not going to lend on this. So it's really hard to finance these deals, right? So basically, what that means is if you can put together the capital, you can buy these at a really low basis, and then when you put in the money to renovate them, you can create a lot of value. So when I spotted this opportunity, and I'm not the only one. I know there's a number of other groups that have kind of like caught on to this as well around the country that I've been talking with some of them. But if you have the stomach to go through this kind of value add, you can create a lot of value. Um, and it reminds me of multifamily when I started in multifamily, when there were a lot of these mom and pop 100 unit deals out there, right? And that had been owned since the 70s or whatever. And so that same opportunity is here, and maybe even more so because you could get bank debt for 1970s, unrenovated project in multifamily. In the hotel business, you can't. So you got to go get bridge debt or do it for cash or do seller financing. A lot of these sellers are open to seller financing as well because they're very unlike multifamily owners. Like they're realistic about what they have, so
Interesting.
they are often willing to do seller financing, and so it's just a very interesting opportunity, and I kind of fell in love with it. And even just like on the tech side, I mean, this is something that like my partner showed me, and I was just astonished. Like when we took over the first hotel, we took it over in June, so the closing took a very long time. We took it over in June of 2022.
This was the cliffside.
Yeah, this is the one overlooking the lake. And in August, we had $100,000 of revenue. It was the first time the hotel had ever had $100,000 of revenue in its entire history, and we had not spent a
Wow.
dime on capex. And the reason that we were able to do it is because we just made it possible to make reservations on them. That's all we did.
You
And
just
just
you just hooked up your PayPal account to Expedia,
yeah,
more or
yeah.
less.
I mean, basically, yeah. There's hotel software that's used, but basically, that's
Right.
all we did. And
Wow.
so you can get, and I'm just surprised by how often I see this pattern of, a hotel. I looked at one the other day that's they're not even on Expedia, right? All the bookings just go to their word of mouth, or they go directly to the website. You can't book on the website. You have to call them or like fill out a form on the website, and they'll get back to you. And they have like, spring price, summer price, winter price, fall price. There's no
And that's
dynamic
it.
pricing, and that's it. And it's like when I looked at that, I was like, oh boy, like I'm excited because I know that like all we have to do is hook up the software, and like right away we're going to get a big increase. It's just there's opportunities like that that are still out there now. But
Have you switched now to your focus completely to boutique hotels for the moment and not riding
yeah,
on multifamily?
for the moment, I mean, I still like multifamily as an asset. I just find it really hard to find deals that make sense, and it's really hard. There's so much competition for deals as well. Like multifamily is on everybody's radar, and there's so many people chasing deals. It's just extremely difficult to get anything for a good price. And to my mind, that just makes things riskier. I feel like you know just the way that I view things, like it's less risky to do a heavy value add on an asset that you bought really cheaply than it is to like go into a bidding war and like potentially overpay for an asset, because it's really hard once you've overpaid. It's really hard to catch up, and like your basis matters in the deal, right? So we're always, when we're doing these, like our kind of metric for doing these deals is these hotels, a finished hotel is going to sell more or less between, depending on where it is. So like, I mean, the kind of stuff that we do, like leisure hotels and sort of tourist destinations, right? Unless they're super upscale, they sell somewhere between $75,000 and $125,000 a key, right? So we're looking to be in like all in post renovation at somewhere like 50 to 60 a key. So we're baking in like that cushion before you even hit 75, right? And so
Right.
and you can do that. Like you can very much do that in this market with these assets. And then sometimes you can get really attractive seller financing as well. So
That's the key.
it's yeah,
Have them carry back something less than prime, and you're
yeah,
set.
totally. Yeah. Because the debt is
And
expensive on hotels for sure. So
is it more expensive than multifamily?
oh yeah, 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 considerably. And mostly you're dealing with bank debt, or you're dealing with SBA loans, or if you do branded hotels, you can get CMBS debt if you have a stabilized asset. But we're not dealing with stabilized assets, so we can't do that yet. But another value add play for these is sometimes, depending on the hotel, you can go from non-branded to branded. That's a big value add too, because you then take it from basically really, really limited finance operations to sort of opportunities to, CMBS debt, which is pretty good debt, and it just makes it, and it's non-recourse, so that's a value
Right.
add right there. So
so many interesting plays that they start getting into with the boutique hotel side. It's like, and so your partner then is the operator, or are you operating as well?
Yeah, so our kind of division of labor is I source the deals, I put the capital together, and kind of have like the overall vision for the hotel, sort of where I want this hotel to go, and have like a lot of sort of marketing ideas. Shiv is really like the nuts and bolts operations guy. He oversees the renovations, and then he is really, overseeing the day-to-day operations of the. We have on-site management. He's really sort of asset managing from Florida, and excuse me. We also have basically an in-house construction crew. So when we buy an asset, they just move in and they live there and they do nothing but work on this until they finish. So
wow,
yeah,
that's a great way to like keep your laborers to showing up to work.
Yeah, we're not
living there.
We're not competing with anybody else's jobs, right? Which is great. So
that's awesome.
Yeah, it really makes things a whole lot better.
That is the first time I've heard that take and strategy on boutique hotels. Thank you, Jonathan. I've definitely learned something new today. That is such a cool strategy. Hope we're not giving away your secret sauce to the world.
No, I mean if you can do it, by all means you should. I mean,
right.
Yeah.
So what are with boutique hotels, and do you still own some multifamily, or was it short-term flips?
No, so I'm a partner in about $250 million worth of deals, but I don't run any of those deals. So the only things that I'm running are the hotel deals.
Got it. So then, looking forward 10 years, or maybe 15, what are your long-term goals for your investments and your I should call it real estate ventures?
Yeah, I mean, I'm going to continue to lean into this hotel space for as long as a runway as there is. I would really like to put together a portfolio of 15, 20 of these hotels, and just continue to operate them as long as I can. Maybe we'll package them up as a portfolio. Originally, we had thought to sort of build our own brand, but we then decided against that because if we wanted to sell individual hotels, we'd have to debrand them, and we didn't want to get into that. So we just decided to brand them individually. But so we have the option of exiting them, piecemeal, or packaging them up as a portfolio and selling it to a bigger, operator. So that's kind of the exit. So I mean, I see myself doing this for another 10, 15 years. Not really looking to retire or anything. So, it's yeah, and I like the business. It's fun. I find it really fun is the thing. So I really like the design aspect of the hotels. There's a lot of creativity involved. The marketing is very creative. I like all those aspects of it. It gives me more to think about than I think multifamily did. So
if you like or love what you're doing, you're not ever really working again, right? That's the old adage.
Yeah.
So you're just having fun doing what Jonathan wants to do every day.
Well, it's not all fun because I still have to raise money, which I don't love. But but that's
I don't know anybody who does.
Yeah, that's just like the upfront pain for the deal, and the rest of it is you have to deal with investors, and when things are going not to plan, you have to take the heat for it. That's not fun. But yeah, like
you're extremely good at it for something you don't like. You've done very well in doing what you don't like.
I mean, yeah, I think if I liked it, I could be better at it.
Fair.
Yeah.
So, a bit to your mentoring side of your career, you mentor new aspiring investors and high net earners. Is that what I understand? Both sides of the coin,
so
like entry level and high income.
For who want to become
mentoring
investors themselves. Oh yeah, yeah. So I really have like a range of options for people, because when I started for years and years and years, I actually refused to do one-on-one coaching. Um,
Really?
because yeah, people would come to me and say, "Would you mentor me?" And I said, "No, you can join my program, but I don't want to mentor you." I have changed my mind on that because I do feel sometimes people legitimately need more attention, or they just want it. But I started my mentoring program kind of as a reaction to what I saw out there in Guru land, where people were charging, $25,000-$30,000 for mentoring. And I was like, how do they get away with that? That's crazy. And a lot of times the programs aren't even that good. I'd
Right.
gone through some of those mentorship materials with my first partner, because she was in one of those programs and she gave me all her materials. And they were helpful, but they were so high level. Once I got into the business, I realized, like, so high level, they just missed so much stuff, and it didn't prepare me for
Hmm.
for the things that actually happened. So I was like, I'm going to put together something better. I'm going to make it more affordable. And so my basic mentorship, right now, the price is $97 a month. You get an enormous, I don't even call it a course anymore, because it's not that. It's more like a reference library, kind of everything that you need to know about um, multifamily investing. And we do 2 calls a month with the group. We have like a first Wednesday call, which will be kind of a little more like me teaching something, or sometimes a guest will come in and teach something. And then we have an office hour once a month where we can just ask questions. And we have a chat inside the school group, so you can always ask questions in there. So that's like the basic thing, which I wind up tending to like push people to that when they come to me, because I'm like,
Hmm.
look, there's no reason for you to spend a ton of money on this on mentorship unless you like really really need individual attention. And then if that's the case, then yeah, I will mentor. We can do a couple calls a month for a higher price. It takes more of my individual time, but still not what the gurus charge. But for most people, at least when they're starting out, that kind of the basic group in Apartment Investors Club is really all they need to get started. Like, to get a really good base of knowledge, learn how to underwrite, learn how to bid on deals, learn how to find deals, learn how to do due diligence, learn how to structure the capital stack. Like, all that stuff is there. I don't need to tell you individually one-on-one how to do it. You can just go watch the material, and then we can talk about it. Right. So that's how I've set this program up. But I've been doing this for like since 2016, I think, on to the third iteration of the
Pre-COVID.
program now.
Okay.
Yeah, pre-COVID. So the third iteration of the program, just finished a new version of the course, and yeah, so please check it out if you're interested.
And with all your such a fantastic program and idea. It's we've all heard of bigger pockets and kind of their forums and such and things, but this is an active, like almost like you see all these life coaches out there, but this is actually a action oriented. Sounds like here's the things to do to get you here, not just what's
Yeah,
people who have read The
and,
Secret and then now they're life coaches. So sometimes they
yeah, and actually, what I've done on the last version of the course, I realized that. So I used to set up in kind of like as if you were doing a deal itself. Like, here's what you do first, here's what you do second, kind of all the way to the end. What I realized was that a lot of people were getting bogged down because they thought they had to go and like watch the whole course, right? And then they were using the not finishing the course as an excuse not to do stuff. So I decided this time around that I was going to front load everything that was really important into like a quick start program, just give you like a really fast overview of everything that you need to know up front. And then when you want more information on something, you go in for a deep dive in like the reference library. And I also front loaded underwriting because I realized that if people don't know, it's really kind of the first thing you need to master is underwriting. Because if you can't underwrite
underwrite.
a deal, you just don't know you don't even know what you're shooting for. You don't know what a deal is worth. It's kind of pointless to go looking for deals if you don't know how to underwrite deals. So I front loaded the underwriting section, and then after that, then and I also front loaded because people tend to get really sort of a little bit weighed down mentally on this. I front loaded like how you build an investor base, because people will have this nagging problem. How am I going to close a deal if I don't have investors? So I front load that piece as well, so that it's just like you've answered the question in your mind, and now you don't have to worry about it anymore. You still have to do the work, but at least you know what the process is. So yeah.
When you do mentor one on one, what do you I imagine there's some you must hear some of the craziest misconceptions, like, or people with some strange beliefs about real estate, and you're like, that's not true, or where'd you hear that?
No,
Have you
I
come across
don't,
anything like that?
no, I don't really get that because I think that the people that I wind up attracting are, I kind of always call my students tend to be sort of like sophisticated beginners, right? So
Okay.
they, they, they're usually not coming into the program with a lot of like crazy misconceptions. Like usually when I encounter people with crazy misconceptions, it's usually people who come to me for mentoring and they want me to kind of validate their crazy misconception. And I burst their bubble and then they're like, okay, I'm not interested anymore. So they don't even come into the program, right? Because they don't really want to know the truth. But the people
Right.
who come into the program tend to be more serious. And then it's just a matter of like how much attention they want personally. So like if you come in for the one-on-one coaching, you still are in the group as well, right? You just, so you get all, it's the same material, it's still the same, you know, group calls, but then you also get calls with me to like personally go through, like I'll walk through your underwriting with you or like strategize with you about how to do something specific or, you know, things like that. Whatever people are kind of concerned about, we'll work on in more depth than we have time for in the group setting.
And last question, what is one piece of advice you'd give to someone looking to start out either in multifamily or, in this case, boutique hotel investing?
So, gosh, one piece of advice: you don't have to do it all yourself, and you shouldn't even really try. You know, everybody has different strengths and weaknesses, and the business of real estate requires a whole bunch of different skills. And it's you'll get bogged down really fast if you try to do everything because that's going to include stuff that you're just not good at and don't have any interest in. It's much better to find, you know, partners who like the stuff that you don't like to do. And, you know, so partner with those people, you'll go, you know, much further faster if you can find, you know, good people that you really get along with who have complementary skill sets to yours.
Great advice. In summation, don't do it all yourself. Find help. Find somebody, a symbiotic relationship who you can, I'm assuming you can partner with, not just get an
Yeah.
executive assistant of some sort.
Yeah. I mean, well, that's, you know, having an assistant when you need it is also really just for getting all that admin stuff off your plate. But you know, that you may not need, right? And you might not want to have, you know, want to spend the money quite yet, but like having partners who, like, if you really like to underwrite, you're probably not going to love like talking to investors and vice versa. If you're like a people person and you just love networking all the time, your eyes are probably going to glaze over when you look at a spreadsheet. So you got to find your other half, right? And go forward that way. And everybody that I know who has really grown fast and faster than me or bigger than me early on found like their other counterpart and so that they were just focused on being the money guy or being the deal guy or, you know, whatever. They weren't trying to do all of it at once.
Right. Great advice. I think a lot of people, I know my first deal that I did way back when it was me. And after that, I'm like, I'm not doing that again. I need someone to grab like one side of this because that I still have some gray hairs from that deal. It was that was 10 years ago. I know I completely feel you on that. I thought I had to shoulder all this because this is my responsibility, and it was to the detriment of the deal. It took longer and much more stressful than it actually needed to be.
Absolutely.
I 100% agree with you, Jonathan. So that concludes our normal questioning. Move into what I call like our lightning round of the podcast. I'm just going to ask you one question, a series of like 5 questions or so, and I'm going to be quiet or try to be quiet and just answer as much of it or as little as you want or pass whatever you say as much as little as you want, and we will be at a wrap. So are you ready, Jonathan?
Sure.
What's a personal milestone you're particularly proud of related to your career or personal life?
Well, gosh, I mean, when you include personal life, then I mean, you know,
Either or.
I'd say, you know, being married for 18 years and having, you know, 2 beautiful girls, that's probably the most important thing to me.
Let's hear it for girl dads. I have 2 beautiful girls myself. I hear you. 15 years married. He told you I'd try. Yeah. Do you prefer multifamily or boutique hotels, and why?
Well, I mean, right. We've just talked a lot about this. Like right now, I think I'm really enjoying the boutique hotel space. So that's what I'm into right at the moment. But that could change. I still think multifamily is a great asset. So I could definitely see myself doing more multifamily deals for sure.
What's your favorite real estate deal you've worked on?
I think probably the first hotel that I did, just because it's
Great story.
like yeah, and just seeing the transformation has just been so much fun, and I just really enjoyed the process of like all the design work, and then the branding, and then just like seeing the whole thing coming together. And also I have to say, I'm sitting here. I don't know if you can see this, but maybe to hold this by my face, but you can't really see this. So
Yeah, what's the blue?
yeah, you don't
Is that the hotel
get
cup?
like yes, you don't get your own branded beer glasses from multifamily, but I can't make it show. I'm sorry, I can't show it. So
Your camera tech is too good.
yeah, so it's I have never been able to sit at my own bar overlooking a lake drinking beer at a multifamily property. So I like that.
Very valid. Morning person or night owl?
Yeah, definitely a morning person for sure.
And last, what's the most interesting thing you've read or watched recently?
Let's see. I read the enormous biography of Winston Churchill by Adam Roberts, which is like 1,000 pages long. That was great. That was really good. I highly recommend that. So
Winston Churchill, I'll have to put that on my list. I read Elon Musk. That wasn't small, but yeah, Churchill sounds a little bit longer.
Yeah.
All right, Jonathan. Well, that is it for my questioning. Is there any last parting thoughts that you'd like to impart upon our audience? And could you also make sure you give us your contact information one more time for those who'd like to reach out?
Yeah, absolutely. So to reach out, please Google Two Bridges Asset Management, LLC, or go to apartmentinvestorsclub.com or LinkedIn. I'm very active on LinkedIn. Please feel free to reach out to me on LinkedIn and start a conversation. That's always a good way to reach me. In terms of final thoughts, real estate is a tough business, but it's a great business. And it is a really great way to, grow wealth over time. And, don't get hung up on what you think you're supposed to do. Just get started. If all you can do is a small deal, then do a small deal. You'll learn so much more from doing a deal than you will from any book or podcast or mentorship program or networking or anything. Just get into the trenches and just start. That's the most important thing.
Just start. All righty, Jonathan. Well, thank you so much for your time. I do appreciate it, and so do our listeners. I know. Like I said at the beginning of our show, I wish I had heard these words 20 years ago when I was starting out, and I probably wouldn't have jumped into the water by myself so quickly. But we all learn. And so thank you again, Jonathan. And that's a wrap.